it's a crazy old world out there.
I mean, to the extent that French banks might have been particularly prudent, it's actually a good opportunity for them now to take over other banks that are weaker, and there's going to be a consolidation. Anyway, I guess we need also consolidation of European banking. There was such tremendous growth in the banking sector that a few banks disappearing might not be all that bad from an industrial organization point of view.
Now, Sarkozy, in an emergency Council of Ministers meeting, said that there's a huge crisis of confidence. There are emergency meetings every day, it seems, and reassurances follow. The more the reassurances come, Max Keiser, the more it seems people are getting worried.
Well, systemically, the problem is a lot bigger than these policymakers are talking about, in my opinion. I think you're talking about a global liquidity crunch that is a magnitude far greater than anyone is really talking about. The $500 billion or $1 trillion or $1.5 trillion worth of bad loans that need to be written off, that number is going to rise to 3, 4, 5 trillion pretty quickly. And the policy reaction across the globe is going to include some pretty draconian policies. And we're going to see a lot of hardship going forward. I don't think that the debt deflation that we're seeing imploding is going to be solved by injecting more so-called liquidity in the system. In the case of the U.S., they have no real savings or liquidity to draw upon, and simply more debt that they're piling onto the debt.
So in such a situation, it's very hard to distinguish between two things that are fundamentally different. One is basically banks that made bad investments, and the second, banks that cannot refinance themselves because the markets have dried up. One is called an insolvency problem, the other one is a liquidity problem. In such a crisis, it's very hard to figure out on a case-by-case basis what is the mixture between the two, what do we have, one or the other. But that takes time, and that will happen over time. So as long as you can't sort it out, the prime obligation of a central bank is to provide liquidity to at least make sure that those banks that just suffer liquidity shortage survive this crisis. And I think the central bank has all the tools to do so. It's not impossible. And we have seen it done and executed in previous crises. So I think the saver, the household doesn't have to run on his deposit. I don't think that's...
Politicians have the additional problem in that they need to get elected or re-elected, and President Sarkozy was elected as President of France, promising to be the President of purchasing power, but yet now we have France in recession, unemployment climbing at its fastest rate since 1993, the CAC 40, the stock market index, taking a daily battering. It's all difficult news for him, Max Keiser. No easy way out.
The purchasing power aspect of this, I can't see improving because all of this liquidity that's being injected is going to filter into ultimately higher prices or inflation. So the purchasing power will suffer. Right now you've got a fall in the price of oil from the historic highs of 147. It's traded back down to 95 and change. But I think actually the longer term trend in commodities like oil is higher, and this is going to add more pressure because some of these other countries with huge reserves and sovereign wealth funds are going to be able to finance and self-finance their own purchasing power, their own consumers internally in India, China, Mideast. Whereas in the U.S. this is impossible, and to some extent it's less possible in the Eurozone.
I mean, this would be the ideal moment to slash corporate taxes, to allow companies to finance themselves out of cash flow. If they have reduced taxes, they could easily do so in substitute for some of the lacking bank credit now. But unfortunately, the politicians didn't do their homework over the last 5 years either. We have huge budget deficits, and there's very little fiscal space to maneuver. So I think the political reaction here cannot be as forceful as one would wish.
So what can the politicians say to their voters? It's bad and it's going to get worse. Everyone's going to have to collectively tighten their belts, Max Keiser.
You have to adopt a phrase from Herbert Hoover. Good times are around the corner. You just got to keep the people believing that good times are coming and don't panic.
We're not sure yet whether it sort of just turns into a smaller slum or a big one. So that's still out in the open. It depends also how the crisis now unfolds over the next weeks and months. So it's hard to say, to make exact predictions about how big the turn down will be. But certainly we're heading for a recession, but no one knows how big it is going to be.
Well, things are developing incredibly quickly on a daily, sometimes several things happening in the same day even. So when it comes to assessing the future, it's awfully difficult for all of us analysts, pundits and journalists out there. But in the short term, President Sarkozy's hands seem to be tied.
Well, getting back to what you mentioned a little bit earlier and the root of this problem going back now 18 months or so, it all started with the collapse of the housing market, which had run up way beyond any possible valuations that could be sustained. The question is, if that's the root of this problem, and I think it is to a large degree, is the housing market bottomed out? And I don't think the housing market has bottomed out. By any stretch of the imagination, you got a long way to go. So this is talking about sucking in a lot more problems. And to that degree, politically, what can be the solution? The policies, no policy is going to make these housing prices suddenly magically improve in value overnight. This is a protracted, really systemic problem that's going to take a long, hard slog.
I think if you follow the French press, the written press, you have this impression, this false impression that capitalism is in crisis. But I think this is a completely false and misleading interpretation of what is going on. We had two separate crises. One was this subprime crisis, real estate market prices in a market which is highly regulated, where the state interferes a lot. And that might have easily been part of the problem. And secondly, we have now, as an add-on, spilling over from the US, because a lot of banks were sort of indirectly involved in this, a banking liquidity crisis. And this is not a crisis of capitalism as well, because banks exist and banking crises exist long before capitalism existed.
Yet do the moves of this week not smack of panic measures, that people are desperate to take action and be seen to take action, Harold Howe?
Yeah, so, but that's a very classical thing. It's nothing to do with Wall Street as such. It's to do with banks. Banks are unstable. They are the weakest links. Basically, all big economic crises in the last 500 years or 300 years start from banks. And that we know. There's nothing new here. There's not a crisis of capitalism of any sorts here.
A final word from you, Max Keiser. We're starting to run out of time.
Yeah, I mean, I agree. It's not capitalism that's the problem, because capitalism, you would have seen a correction in the real estate market already 5 years ago. But because of the artificially cheap money, the bubble was allowed to grow. So it's not capitalism or free market capitalism is not the problem. The problem is actually that you've got too many politicians who are being fed too much money from derivative schemes on Wall Street, changing laws and changing the landscape, the playing field to a degree where speculators rule, and the good, hard soundness of a true capitalist system has not shown through.
That will be the final word. Many thanks to both of my guests, Harold Howe and Max Keiser, for coming on to Politics. We'll see you again next week, same time, same place. Until then, bye for now.